things I look at. We see a lot of deals in the market where, brokers are trying to sell at like 5 cap, and maybe I can only get it to like 6.25. And for me, that's not worth it.
Yeah,
I need a
you're at
much
a
larger
negative
spread.
leverage on day
Yeah,
one. It's pointless.
exactly. Exactly. But if I can drive it, when I see a lot of value at it, usually transacts around, 5.75, 6% in that market. And if I can drive that to 7.5, 8%, I'm usually pretty happy. And I think it's worth pursuing that project.
All right, welcome to Real Estate Hustlers Podcast. I'm your host, Josh Appleman. Today we are joined with Nick Elder, from X Pharma and $500 million or 500 million plus GPO sales leader. Scaled a cannabinoid. Sorry, you're gonna have to fix that for me here later. Startup, 100 plus accounts. Now, investor relations at Ironton Capital. Nick is an LP and GP in 10 plus deals and owns around 53 doors. Nick, if you could let the listeners know a little bit more about yourself and correct the cannabis deal for me.
Yeah, cannabinoid. So this was like kind of
Okay.
during the CBD craze of 2019, and that quickly, rose and then fell. But I helped lead the sales team and growing that company as well. But a little bit of background from me. So I moved out to Denver in 2016, started my career in pharmaceutical sales, and then around 2019, caught the bug in real estate. Just started doing some small house hacking in Denver, which is what I believe to be one of the best, if not the only best strategy here in Denver, given the affordability challenge. But started house hacking, bought my first house in 2019, bought my second house in 2021, and really caught the bug in real estate investing. I saw just the overall financial impact it made in my life and in my career in that short time period. And then my luck ran out in 2022. Ultimately got laid off from my pharmaceutical company. So my luck ran out on that front. I had been through several rounds of that and successfully made them through. But this time my luck ran out. And around 2019, 2020, I really started networking with a lot of people in the private equity space, in the multifamily syndication world, just trying to learn as much as I could. Did a lot of self-study, and just try connecting with as many people in that space as possible, especially those that were further along than me and already had demonstrated some success in the industry. So when I got laid off in 2022, I kind of already built up this network. And one of the partners at Ironton Capital came to me. He knew that I was out there actually trying to get my commercial real estate license in Denver. I thought I was gonna, sell real estate and gradually transition over to the principal side of the business over a couple years. But he came to me and said, it's going to be really hard in commercial real estate. Not that that should be a deterrent, but the market's really shifted, right? We started to see the rising interest rates and transaction levels come down considerably. And he said, we need a lot of help here at Ironton Capital. We've got one guy here that's helping to raise money. We need another guy to deal with the inflow of investors, and we need somebody to really help start and build out this investor relations team. So I cut through I cut through the brokerage side of it. I skipped that part and went right into the private equity and into the operator side. And so joined Ironton Capital in 2022 of November. And we were they had just launched the fund. So it was about 25 million in AUM at that standpoint. Today we're quickly almost at $100 million actually. So just a couple million away from that key milestone of 100 million. So we've raised about 75 million in that 2.5 year time period. Additionally, I do some smaller syndications on the side as well. So I have two partners through that entity, Trinity Peak Partners. We've got 53 units in Northwest Arkansas. So I really, I said to myself, I don't want to do pharmaceutical sales anymore. It's not only is it just cutthroat, but the security and certainty around it is almost non-existent. I saw more of a long career for myself in real estate, and I saw that to be a much larger potential over the next 20, 25, 30 years of my life. And so I dove right into it, went head on, and, very pleased with the decision that I've made in doing so.
So how is Ironton Capital, how are they set up with operations on the back end as far as property management and make sure the assets are taken care of?
Yeah, so we're fund to fund. So we're simply an LP equity group. We're not managing the asset. We're not doing the property management or securing financing. We're going to other operators and writing larger LP checks. Typically with operators where there's a much higher minimum, say $1 million or $2 million minimum, we'll package that up into our diversified funds, and then we'll go raise the money from our investors for a lot lower of like a $50,000 investment. So we're simply an LP equity group.
Got it. So you're not sourcing deals, you're not underwriting deals. You're looking at more towards what the operator can bring to you all, and then maybe some due diligence on the deal at a high level, or how does that process look?
Yeah, so we go out, we look at every property. We definitely don't just underwrite the deal, look at the numbers and say, yep, that looks good. We want to get a feel for the area. So any investment or new operator sponsor that we partner with, we go out, we meet with them, we look at the projects that they've invested in, we take a look at the comps in the area. So there's a pretty heavy due diligence process our investment committee goes through before we allocate our investors' capital into those deals.
Okay, yeah, fund of funds. So you're investing alongside someone else's fund as well to bring get all the equity pulled together and close on the property. So, what does it look like when you all close? What's the process? Is it sit back and get updates?
Yeah, so for example, we're closing out our National Diversified Fund 10 right now. We've got about seven investments in the fund. We're closing that out. We've raised the equity. So we've raised enough equity up until this point. So we're going to close it up. At this point, all the capital has been deployed into those projects. And then every quarter, we'll send out quarterly updates to our investors based on how those projects are performing.
Okay, all right, got
Yep.
it. Let's go on the operation side for the real estate. Tell us
Yeah.
about your first deal, how you found it, how you financed it, what the business plan was.
Yeah, so we have a 25 unit in Fayetteville, Arkansas, and our most recent deal is a 28 unit about 15 minutes north in downtown Springdale area. So I'll talk about the latest one, but the Parkside Flats, the 28 one, we found this through a brokerage relationship that we had in that market. And we recognized that it was a really good deal. It was 28 units for about 2.95 million, but it was right in downtown Springdale. So A-class area. The Walmart or the Walton family has been putting in a lot of development in that area as well. And we acquired the asset at about the average rent was about $710 per unit. So very much under rented for that market. There was a clear opportunity to come in, renovate the units, bring the rent up to what I thought would be 1025. So I underwrote the deal to about a 1025 post renovation.
And what size are the units?
So they're about 550 square feet, one
Okay.
ones. So it's not you got essentially seven quadplexes are the property, and it's right across the street from a brand new renovated $20 million park as well, which is very popular for the residents and everybody else in the area. But we're in the middle of the renovation on that right now, so we're coming in doing a full renovation. There's a couple units that just needed partial renovation, so just the floors were in, the appliances were in. We just wanted to do a quick upgrade on it. But so far, project's been successful as we're in the middle of the renovation. We're already surpassed our pro forma of 1025 per unit. We're up to 1075 per unit now. So just getting a lot of really good demand. I think it's a testament to the work done by us, and then also just the location of the property and the demand in that area.
So, how are you all managing the renovations?
So we're managing ourselves. So we've got a guy, boots on the ground, very analytical, detail-oriented guy who's got some experience in the industry. Me and my two partners, we're from Denver. So my two partners manage most of the construction process. In addition to our guy that's boots on the ground, they're working directly with the general contractor, making sure that everything is done on time and on schedule and on budget.
Got it. Okay, so you got
Yeah.
a GC on site that's lining up the materials, getting the contractors in there, making sure everything's getting done, and then you've got oversight on top of the GC.
Yeah, exactly. And actually, we've been managing a lot of the purchasing of the materials and supplies simply to lower our cost overall,
Yeah,
and that's been very successful. So we're just really making sure the GC is on time and on budget, most importantly. But we're managing a lot of the sourcing of the materials and acquiring the materials and supplies.
got it. Good deal.
Yeah,
So how did
yeah.
you all finance the project?
Local bank loan. So we work with a Generations Bank, so they're local company or local bank there in the area. They really understand the growth of the market. They understand the opportunities, and we work with them on our 25 unit. So it was really easy. We liked their structure of the loan that we were able to get. And so it was pretty easy to just work with them. And I found that working with a lot of the local banks, there's a lot of flexibility. They understand the market and what's going on a lot better than some guy who's trying to broker your loan from, Denver, Colorado, who don't really understand what's going on. So I'm a big fan of working with local banks, and we were able to get a much better interest rate simply by, of course, bringing in, for example, more deposits to get a better interest rate. And so, we were somewhere between 7 to 7.5 on the interest rate.
It's not bad. Not
Yeah,
not right now.
I'll
That's,
take it.
that's probably what is it, a 5-year term?
5-year term, yeah, 18 months IO, which I
Okay.
found with local banks, you won't get as aggressive as an IO period, so
Yeah.
you got to execute pretty fast. Yep.
Yeah. It's not, yeah, it's a good bridge. Very
Yeah.
cool. How did you all find the deal?
So local brokerage, actually, that's pretty big in the Arkansas area, based out of Little Rock. Um, our guy that's boots on the ground knew that broker, and he came to us and said, "Hey, we've got this 28 unit deal. 2.95 is what the seller's looking for." And honestly, we knew it was a great deal right away, so we quickly went under contract, took it up, took it down for 2.95 million. There really was not much need to negotiate from there. We thought it was a really good location, strong basis, and a great opportunity. So just you know, building those relationships in the market helped us secure that deal.
How did you determine it was a good deal? Just by the rents being compressed?
Yeah, exactly. We looked at it, and what I like to really look at is what is the median income in that area. And for downtown Springdale, the median income's about $61,000. And if we're acquiring this property, I mean, first of all, we looked at the location. So we said there's this brand new renovated park right across the street. Uh, right down, within walking distance, about a minute. You've got the Walton family that's putting in a brand new Class A apartment complex, so they see the growth potential in downtown Springdale. And then you also are in walking distance to a lot of different restaurants and coffee shops. And so we had a chance to buy this at about, I think it's about $105,000 a door. And just looking at what other things are trading at, we felt that was a really good opportunity. There was no need to just kind of sit here and dilly dally and nickel and dime for like another 10, $15,000. And then so ultimately we also looked at we looked at the rent. We said, well, there's still considerable room to bring this rent up. If it's at 710 now, even if we got it to about 1025, you're still well below that 25% mark against the median income. So we felt that there was enough cushion that the market could absorb that rental increase, and it has clearly shown that it can absorb that 1025, but it can even absorb up to 1050 and 1075.
You said it's 28 units,
28 units. Yep.
1,075.
Yeah, 1075.
28. Okay, $30,000 a month, 30,100.
Yeah, I think so. I don't
Okay.
have that number off the top of my head. So
And then what was your let's see, 3,100. What was your reversion cap rate?
so we acquired it at about a 5.8% cap rate is what we acquired it at. We're projecting it, an exit around 6.25.
6.25.
Yeah. So, and we like to look at like year two cap. So, year two cap, by the time we renovate and drive the NOI, we're pushing about 7.5%. So pretty good spread there.
What is your renovation budget?
650,000. I think we'll probably come a little bit under that. We decided to eliminate a $75,000 item from the budget, so that should help us come down under budget for the project.
Got it. Okay.
Yeah.
Very cool. All right. Tell us
Yep.
about your next deal that you did.
So the one before, so that was the most recent. The one before that's a 25 unit. So that was a pretty much more aggressive business plan. This one's in Fayetteville, Arkansas. We Every tenant when we acquired it was month to month. So we purchased this one for 1.95 million, 25 unit. Rents were about 650 per unit, and every tenant was month to month. So really, what this property needed was a complete overhaul. Needed a complete rebrand, new tenants, and so when we came in, we made the decision to issue non-renewals to all tenants. Unfortunately, just a lot of shady behavior. some crime here and there that would happen on the property. And so we came in, we vacated the entire building within 60 days and spent about $520,000 in the renovation, and renovated, rebranded the property. It's now called the Dean. Gave it a complete exterior facelift, renovated each individual unit. And upon renovation, we were leasing up at about 1025 per unit. So we got a little under about a $600 lift per unit in rent there.
What do you look for when you're underwriting your deal so that you're not purchasing a property at a future value?
Yeah, I mean, I look for like what's the market cap in that area and what's like my year two. What kind of value can I drive into it? I mean, I pretty much know at this point, we like to target some of these like 20 to 40 unit deals. And so I know at this point, like, what does the rent growth on that have to be for it to really make sense? So when I'm looking at the back of the napkin, if I see that, okay, here's a 30 unit deal, the rent in that market according to comps is about 400 under market. I start to kind of get a sense that that might be a pretty good deal because I know that there's probably enough rent lift in there. And then I look at, well, what are they trying to sell it for? And then what do we need to put in to renovate each unit to actually accomplish that $400 rent lift? So those are the kind of things I look at. We see a lot of deals in the market where, brokers are trying to sell at like five cap, and maybe I can only get it to like six and a quarter. And for me, that's not worth it.
Yeah,
I need a
you're
much
at a
larger
negative
spread.
leverage on day
Yeah,
one. It's pointless.
exactly. Exactly. But if I can drive it, when I see a lot of value at it usually transacts around, 5.75, 6% in that market. And if I can drive that to 7.5, 8%, I'm usually pretty happy. And I think it's worth pursuing that project.
Yeah, because there's a lot on the market right now. Just that you can seven seven caps all day long right now. I mean, I don't know
Yeah.
what Denver's looking like, but I'm in Cincinnati and seven caps. You're not really going underneath under a seven cap right now at all. There's no sense.
Denver's it's amazing. I mean, Denver's a huge metro area at this point. You're still having institutions coming in buying stuff at like 4.75, 5 cap, maybe they'll
Well,
hold on to it for a long time. But there's really a reversal happening in Denver. I think with a lot of markets, we've seen cap rates expand a little bit, I'd say, in the last 6 months. I think there's a couple things driving it. One, the legislation in Denver has just completely reversed to the point where landlords have zero protection and tenants have all the protection. And so, in places like Arkansas, it could take 3 days or a week to evict somebody who's not paying rent. In Denver, it could take 3, 4, 5 months to evict somebody who's not paying rent. So I think if I'm going to operate, that's a huge deterrent for me looking in Denver. If I'm buying some of these smaller deals, you deal with a lot of those C class type tenants, and you can very easily have to go through a couple evictions, and it'll just completely erode your cash flow and prospect on the deal. So I'm a little bit deterred by Denver, quite honestly, for that specific reason.
yeah, it's just yeah. I had someone else on the show last week, and they moved from California to Florida just because of exactly that. They want to just totally bury the landlord and make it to where it's not even feasible to be a landlord in order to provide housing.
Yep.
Uh,
Yeah,
Florida.
I'm a fan of Denver long term. It's a great quality of life. People will keep moving here. But if I'm going to invest in Denver, it's we invest in some development projects here, for sale townhome projects, single family homes. So we do, from an Ironton Capital standpoint, we invest in those deals as an LP, but we don't really invest in a lot of value add multifamily here.
Yeah, it doesn't sound like it's feasible. You can't get the right buy price, and then when you do get things stabilized, then you're still up against the legislation and what tenants. I know in California they pay the deposit, but the deposit goes back to the tenant
Yeah.
regardless if they damage the property or not. So it's totally just backwards. I'm not used to that at all. So it's
Yeah.
kind of common sense tactics over here, I think.
I
But
agree. I'm not sure who's making it, but yeah, that has really led a lot to. You also have banks here who have been unwilling to lend. You had like First Bank, who lent like crazy in 2020, 2021, and then they completely shut off the hose pretty much when interest rates rose. So it was really hard to get any kind of financing with the largest bank here on construction or value add deals. They were very picky and wanting stuff that was already stabilized, Class A type of properties. I'll be bullish, I think, on Class A in Denver, but it's hard for me to become bullish on, the Class C, the typical Class C to Class B value add project.
Have
Yeah.
you followed anything with being able to tokenize real estate and use trade with Bitcoin?
I haven't, frankly. I don't understand it. It's too volatile. There might be I'm sure there's an opportunity out there someone could explain to me, but to my naive brain of how that works, I haven't really looked into it. How about you?
Yeah, no, I'm following it, and I think it's definitely going to be a thing for sure. It's becoming more and more, I think, embedded to where it makes sense. It's more of it's becoming more of an asset class that's trading that is becoming real. I mean, Bitcoin's through the roof, which
Yeah.
will put more in there. But then even tokenizing real estate and making real estate from illiquid to liquid is that's pretty interesting.
Yeah,
Um,
it is. It
so
is.
there could be some plays there for sure. What about AI?
I mean, I'm a huge fan of it. I mean, I use it every single day in my job.
Yeah.
AI. I haven't
In what
quite figured
ways?
it out. Yeah, I mean, like investor reporting, I use it a lot for. It helps me with underwriting. It helps with market analysis as well. When we're looking at deals, comp assessments, when we're deciding if we want to evaluate deals. So I use it all the time. Probably like 15, 20 times a day. Um,
What platforms have you seen? Have you used that are like under the radar but are just giving really good information?
I use Perplexity AI a lot. I think most people talk about ChatGPT. I mean, Perplexity AI, I think I have found to be very efficient, even more efficient from like a market analysis standpoint. If I want to find the answer to something, I really like the answers that it gives me. I think ChatGPT is really good for maybe creating something. So that's kind of how I've differentiated the two.
Yeah.
There's some other ones. Lovable AI is one that kind of has come onto my radar that somebody referred, but I haven't really dug into it a ton. But I like the platform so
Yeah,
far.
it's for building web pages. But
Yeah.
in ChatGPT, I think it keeps telling you what you want to hear. It's like you have to break it. Like stop telling me what I want to hear. I want you to tell me what I don't know. And it's like you just have to prompt it the right way, or get it to where it tells you the information versus because that can get you in trouble. If you're looking for unbiased information to make a good decision, and it's telling you like exactly what you're looking for, and it's just I've caught it a couple times. I'll go over to Perplexity, and then I'll go to Gemini, and then Grok, and try to get some different points of views, and that works too. It does work.
I'm so
Um,
glad you said that because like I've even like prompted ChatGPT like quit telling me what I want to hear. Give me a more pessimistic viewpoint.
well, and
And
then
so
when you go, do tell it to give you a pessimistic viewpoint. Now the Earth is on fire. So I've had that happen too. I'm like, oh, I need to sell my entire portfolio here. So
yeah, that's
but
funny.
you
Yeah.
have to, and you have to know I guess the rails as far as what it's giving you on direction. But there's a website it's called Hello Data, and I've been using that quite a bit to comp the rents, and
Okay.
it'll find out all the other listings that are on the market, units that are for lease, and it actually uses the pictures to
Mm,
base the asset class. So the
okay.
renovation pictures, pictures of the units, it'll scan those and then it'll come up with an asset class. Very cool. Been using that a lot, and then it'll spit me out a report every morning to kind of tell us where we need to be at on our rents because rents change daily. Well, I mean more monthly, but you can if you're optimizing your rents, you should go up and down on what you're offering rents to the public too. So
Yep. Yep.
that's been pretty helpful for me.
That's called
Um,
Hello Data. Hello Data.
yeah,
Is that what you
Hello
said?
Data. It's just it's cool. It's cool. It's getting better. Super young dev team over there, but they're cranking it out. So,
Okay.
um,
Good.
but yeah, AI it's not going away, and I think the more you use it, the more you're familiar with it. It's not even about having competitive edge anymore because I think it's everyone's going to be using it, but
Yeah.
it's getting to where everyone's able to do more and get more things done more efficiently. I think it'll take away the jobs that
Yeah.
really people show up to collect a check on, and it'll force
Yep.
those people to bring more value and to level themselves up in order to then go out and collect a check.
Yeah. No, it's revolutionizing the world that we live in today. And I think we will see a lot of I think we'll see job creation as well. But I think we'll see a job loss, but I don't think we'll see much loss in productivity from companies because of that job loss, just because of what AI can accomplish.
Yeah.
And so, yeah, I'm a fan of it. And,
What I've
I see
noticed,
how much I use it. And it's like, well, I got to imagine millions of other people are using it in the same context as I am.
yeah,
So,
yeah, customer service for sure, but it's almost like a lot of the tasks that I would want it to do for me, you still need to keep in there to get it to the finish line. So
yeah,
it's still early, still changing a ton, but certainly need to keep your finger on the pulse and just um, keep it within your organization.
exactly.
And that's what we're doing on our property management front, and then properties in general and service order tickets. So it works. It's good.
Yeah.
Um,
Yep.
if with your experience that you've got so far in the industry, what are some takeaways that you wish you knew then, what you know now, that the listeners can benefit from?
Yeah, that's a really good question. I think, we bought, for example, the 25 unit deal. We looked at it and it was like, okay, it's a million, it's a mile and a half away from the university. So this could be a potential student housing play, right? And so when we actually really dug into it, it's like, even though it's just a mile and a half away, it still even has different supply demand imbalances and tenant risk than maybe the property that's like even a mile away from there. So I mean, when people say real estate's hyper local, like it's even more hyper local than you think. You can't, for example, assess, well, what is Denver's supply demand as a whole? You got to be like, well, what is Aurora supply demand? What is Lohi? What is Sloan's Lake supply demand? So it's even more hyper local than we think. And so I probably look at comps a little bit differently or assess the property potential based on what is like even closer to that property than maybe what is like a mile away, because it really is different. You go down one street and one street's completely different than the other. I think also,
That's a good
uh,
point.
yeah,
Just like even in Houston and Dallas, those areas, I say specifically because if a property is at 85% occupancy, a lot of people would say that's the low hanging fruit. I'm going to get it to 95%. But the
yeah,
market is at 85% occupancy because there's that much inventory in the market.
yeah,
So it's not that
exactly.
a new operator can't come in and just fill the void, and then you've got an immediate upside. So it's doing your comps, doing your diligence on population, and so on and so forth.
Yeah, I mean, we'll look at deals, and a lot of brokers or people lump in Northwest Arkansas to just what is the economy of Northwest Arkansas, right? You've got Bentonville up north, which is where Walmart headquarters is, a lot of other Fortune, 500 offices and locations. But Bentonville behaves very differently than Fayetteville and Springdale. But when you look at a lot of these decks, if you're not from the area or you don't understand the area, they'll lump Northwest Arkansas into like, well, what's the supply demand of all of Northwest Arkansas? But in reality, that cannot be applied that broadly. You got to look at Springdale individually, and you got to look at the different neighborhoods in Springdale. You got to look at Bentonville, and you got to look, well, where is it actually happening in Bentonville? Same with Fayetteville. So it's just so hyper local, and we see it here in Denver too, right? I mean, you look at places like, and I don't know if you're familiar with Denver, but Sloan's Lake, growing area. You've got Aurora. You've got a little bit north from there, and everybody looks at that as the Denver MSA, but they behave so differently, and you've got different tenant risk and tenant class in those submarkets. So get as granular as you possibly can, because two streets away from your property could behave completely differently
Yeah,
than where your property is. Yeah,
yeah, and definitely check the crime data. We still have Cincinnati is a major MSA, and you've got your submarkets, Price Hill, and
yeah,
then within Price Hill you have your neighborhoods, and the neighborhoods is where all the activity goes on, and you do need to drive and check it out, check the crime, check Google reviews. Actually, you get a
yeah,
ton of data from Google reviews, ton of data. Uh,
yeah.
I agree. Very cool. Cool. If somebody wants to reach out to you, learn more about you, possibly invest with you guys, how can they get a hold of you?
Yeah, so I usually just direct people to my LinkedIn. I'm very active on LinkedIn, so you can just search my name, Nick Elder, and you'll find me. So that's usually the best way to get in touch with me.
All right, cool. Nick, I appreciate you coming on today. I look forward to following you. Thanks again.
Thanks, Josh.
All
Appreciate
right.
you.
Thanks. Bye.